Stocks pull back after a strong open led by IT and realty, while auto and utilities show some strength. Mid-caps fare better.
Passenger vehicle makers perk up as signs of a fight back emerge. M&M's Anisha says that the SUV Motors is looking to double capacity, while analysts see Maruti making a strong comeback with new launches.
PVR skids after prominent investors sell collectively 7.7% stake, and also GR Infra sulks after promoters launch an offer for sale for up to 6.8% stake at a significant discount. But Sundaram Fasteners perks up after domestic fund picks up stake from the promoters on Wednesday.
Mid-cap stocks outperform with several cues driving counters. Home First Finance perks up on report of a strategic deal, while Aditya Birla Capital gains after CCI clears investment in its health insurance arm. Optimistic order outlook also drives up KEC.
Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. Well, let's begin with a quick look at the markets. And when it opened today, it looked like it's going to be a great day of trade like yesterday. 0.5% up in trade, but then it is exactly the opposite at the moment at lunch hour. So almost 0.5% down on both Sensex as well as Nifty, and Bank Nifty, which remember showed a lot of momentum earlier part of the day, is now beaten down 0.26%, still outperforming the key indices, I would say. And the mid-caps are the ones which are outliers, still in the green, and 0.28% high up in trade. And advanced decline ratio, therefore, no consolation. It's still in the favor of declines, but with broader market looking slightly better, the gap between the advances and declines is not as wide as the key indices have been showcasing. Some of the auto counters like Maruti, Eicher Motors, M&M are the ones which have a green tick, but overall there is a fair bit of weakness that we are seeing in the heavyweights, and Nifty 50 has, remember, come below the 18,000 level that it had conquered, and about 180 points lower than the high point of the day as well.
Oh, absolutely. We've definitely seen quite a slip from the opening levels, 170 points, as Nisha pointed out. But, you know, this comes after days and days of momentum. Even on the Nifty Bank, in fact, we've seen from the highs a 500-point cut. But remember, if you take a look at what's going on with the Nifty Bank for, you know, a 1 month period, it's up almost 6%. So I don't think we can really complain about that. In individual counters, they're quite split. So take a look at SBI, ICICI Bank. These ones will come up for you, and they're holding up in the green for now. They're also off the lows. While on the downside, you have something like an Indices, Axis, Kotak, all of these exerting some pressure. Auto stocks good, like Nisha pointed out. On the downside, it is really tech, which once again continues to bear the brunt. So Infi, HCL, Tech Mahindra, all of those seeing some cuts. Remember, this is after the 3% drop that we saw yesterday, and it is also the pharma pack with something like a Phoenix Mills down 5%. So do keep your eye out on the pharma and then real estate pack as well. Phoenix Mills from the real estate pack, and pharma has some of the larger names which were up for you. So that's what's going on with the market action. We'll keep coming back to this. But first up, let's talk about some individual stocks which are moving around. PVR is one such. It's under pressure on the back of a large block deal. Nimesh is here with the details on this one. Nimesh.
So there is a confirmation that 7.7% equity has changed hands in a block deal. So clutch of private equity investors sold 7.5% stake, which is around 47 lakh shares at an average price of 1891, a close to 2.5% discount to yesterday's closing price. Now, in terms of buyers, the feedback from the bankers is, 80% of the book was built by long only funds, 20% by hedge funds, and within the 80% of long only funds, there was a 50% participation from domestic mutual funds. And I believe one of the domestic, mutual fund was an anchor investor as well. So the book was well bid by long only funds, but the fact that 7% equity, 7.5% equity got sold at a discount, and that's why there is a bit of pressure on that particular stock. Remember, the institutional holding is quite high in PVR, close to 83%. So it's largely a shift from private equity investors to clutch of domestic and FIIs. But the fact that Ps have started selling, there is a bit of pressure in today's trade, and also the fact that there is a bit of discount as well in the block. So, but overall feedback is well bid by long only funds as well as some domestic mutual funds as well.
All right, more than 4% down on PVR there. Thanks so much, Nimesh, for filling us in with those informations. And now, next counter on our radar is Kac International, which is trading in the green on the back of some optimistic management commentary coming in. In fact, company tells CNBC-TV18 that they do expect to clock in a double-digit margin in FY24. Let's hear out a word from the MD and CEO of the company, Vimal Kejriwal.
So as far as Brazil is concerned, all our legacy projects will get over by October or max, let's say 15 November or so. So Q2 and maximum Q3 would be the last quarter where we would see a negative impact from Brazil coming in. So Q4 onwards, I think we have a good book in Brazil on supplies. So it will start turning positive from that. Q2 would remain at a similar level to Q1. Q3 will start improving, maybe 50, 60 basis points, 70 basis points. It will to depend more on how much we are able to fast track execution of the newer projects other than Brazil. Q4, maybe another 100 basis points. And what we have been generally talking about is from FY24, we should inch back towards our normal double-digit margins.
All right, that is the management of KEC. Order inflows are looking good. Margins should be back at double-digit levels by FY24, and the stock is up 4% on all of those comments. But shifting focus to an exclusive now, sources are telling us that the insurance behemoth LIC is mulling its own depository for insurance dematerialization. My colleague Yash Jain is picking up all of this exclusive information and joins us with the details. Yash.
Well, last entire week, we at CNBC-TV18 have spoken about how insurance dematerialization will be a big opportunity for various depositories, and the largest life insurance company, that is LIC, has looked at that very opportunity. What we've been given to understand from our sources is that LIC is considering starting its own depository service, which would be for the purpose of dematerialization of insurance policies. This will be a separate subsidiary under LIC for the purpose, as I said, of dematerialization of insurance policies. And the talks regarding this thing between LIC and the insurance regulator are expected to happen very, very soon. As far as the timeline from the insurance regulator is concerned, IRDAI has said that by December 2022, that is December of this year, all new policies will have to be issued in DMAT form, and a year after that, that is by December 2023, all old and existing policies will have to be brought on the DMAT platform. That's the timeline, and that's exactly what LIC has also been working with. As far as the expense incurred on dematerialization of policies for LIC is concerned, LIC has around 75% market share when it comes to total insurance policies in the industry. It issues nearly 2 crore policies each year. Also, there are 22 crore policies which are active and existing belonging to LIC in the industry today. So if this was to be done through a different subsidiary, let's say a CAMS or NSDL or CDSL, then LIC would have incurred around 1200 to 1400 crore on dematerialization of policies. But now that money will be coming to its own subsidiary if this insurance depository comes into existence before this particular timeline. Also, because it's your own subsidiary, it would also be allowed to take dematerialization business from other life insurance companies and other insurance companies. Also, the cost for LIC itself could come down since it's your own vertical doing the work of dematerialization for the company.
All right. Thanks so much, Yash, for getting us all those important details. Dematerialization is going to be a game changer for the insurance sector in India. With that, we'll slip into a short breather on Business Lunch. But up next, Food Secretary Sudhanshu Pandey defends India's decision to restrict rice exports. More on that after a very short break.
Welcome back. You're still tuned into Business Lunch, and here's an important story. India's Telecom Ministry has called on telcos and tower companies to boost the quality of telecom service, hinting at reforms to improve the financial health of the sector. My colleague Ashmit is here with all of those details. Ashmit?
Well, the telecom industry being put on notice by none other than the telecom minister himself, spelling out that there are a whole host of targets before the industry. In fact, chief amongst them, the telecom minister was quick in pointing out, will be quality of service. The minister pointed out that the whole host of reforms that have been introduced by the government, the industry now needs to reciprocate, needs to respond, needs to buck up, and needs to pull up its socks, especially on the front of quality of service. In fact, he confirmed, saying that Tali ek haath se nahi bachti, essentially saying that it can't be a one-way street, that the telecom industry also needs to respond, and that in saying so, the telecom minister confirmed that the DOT will be moving the TRAI for increasing the quality of service compliances by 3 to 4 times. That's just one, though. The other target that has been set before the industry is for the 5G rollout. The minister said that while the auction has been hugely successful, there is a commitment of 80% coverage that has been given by the DOT, target as such given by the industry, given by the DOT to the industry. The industry, he said, will be making the announcement shortly as far as rollout is concerned. He did not, however, prescribe the timeline for this 80% coverage. Another issue that, in fact, another target that has been given to the telecom infrastructure industry has been to move to sustainable sources of energy. The minister very clearly saying that sources of energy such as green hydrogen, such as other sustainable forms of energy must be considered for reducing the carbon footprint. So a whole host of items on the checklist, but that's not the only one. However, there's one that he's placed against the government itself, saying that the government is working hard on the third phase of reforms. He was referring to the draft telecom bill. He said that there's a lot of work that has gone in. There's a lot of public comments that have been received, which will be reflected in this draft telecom bill, and that it will be released for public consultation and public comments on or before September 23rd. So giving himself a deadline there as well. So clearly a stern word there from the minister, from the telecom minister to the telecom industry.
Power consumption in towers, that's going to be a big issue. I'll request the industry to come up with a good solution. We are willing to partner with you. We are willing to help you find a more sustainable solution. How can we use more and more renewable energy, or something like green hydrogen or grey hydrogen, whichever, or some sort of other solution which can really reduce the carbon footprint of the telecom industry. That is one item which I'll request you to come up with some options. Then we work together. Industry and government, we work together and find some good solution. We are targeting a very, very aggressive timeline. We should definitely cover at least 80% of the country in a very short time frame.
All right, so big changes, and the telecom ministry really is ready to work with the companies to really make the sector green. Moving on then, Food Secretary Sudhanshu Pandey defends India's decision to restrict the rice exports, says that the intervention was necessary as broken rice exports had zoomed between April and August period. Now that's not all. Pandey also says that India has been very responsible and that rice exports this year will be 17% higher than the last year. He also said that India exported 21 lakh metric tons of wheat before the regulations and also 24 lakh metric tons post that. Also, as the government gets set to allow 5 million tons of sugar exports, well, the Food Secretary says that India has adequate stocks and domestic prices are expected to be stable. Listen in.
Of the previous sugar quota that was allowed by the government of 112 million lakh metric ton, out of that 107 lakh metric ton has already been exported, which is highest ever in the history of India. And still we are left with another 5 lakh metric ton balance quota that is available with us, and we should be in a position to meet the requirement of our neighbors in particular. In domestic market, by the end of September this month, we will still be left with a stock about 60 lakh metric ton, which is more than adequate for meeting our requirement of next 2.5 to 3 months. And as a result of this availability of stock, we have very stable prices of the sugar in the domestic market.
All right, those are some important comments coming through from the Food Secretary. By the way, the Nifty Bank is just blinking red and green, and it's been quite shaky. Right now, it's around 30 points in the green, and it is really the likes of SBI and ICICI Bank, which was seeing some pressure. Right now, they're moving into the green, and that has got the Nifty Bank back in positive territory. But let's now bring you some more important developments. This is in the Secunderabad EV showroom fire. The Transport Ministry has ordered now a probe into the fire that broke out at the electric bike showroom in Secunderabad, killing 8 people. people, experts have scouted the showroom after preliminary findings. And as India bats for a complete EV adoption, the ministry has cited this very incident as cause for major concern. Now, the ministry has also proposed a comprehensive regulatory ecosystem for the pre-owned car market. And the centre's proposed guidelines include authorized certification for registered vehicles, dealerships, detailed delivery procedure between the owner and dealers, and lots more.
All right. So that's an unfortunate event there. With that, we'll slip into a short breather on Business Lunch. But when we return, remember, Prime Minister Narendra Modi is due to attend the SCO summit in Uzbekistan later today. More on that one coming up next. Welcome back. You're watching Business Lunch, and a quick look at the market. And yes, there is a fair bit of recovery that is seen on the bank Nifty side. In fact, take a look at that on the flat line with a green tick, and Bank Nifty is gaining by 31 points, but still at 41,432, which is way below the record levels that it had hit. And mid-cap universe, that has also moved up higher, 0.4% up in trade. So keep an eye out on the market. Some of the financials are really gaining in trade. Now, moving on to some important developments coming in from the global arena, and Europe is still looking for ways to tackle its energy crisis. And the European Commission President Ursula von der Leyen put that on the top of her to-do list in yesterday's State of the Union address. In fact, CNBC's Sylvia Maro wraps up all the details for us.
The EU has intentions to collect more than 140 billion euros in windfall profit taxes. Essentially, the idea here is to use those additional revenues that some of the utility and energy firms are seeing at the moment to then use that money to support households and firms that are struggling with higher energy bills. So this was one of the main announcements from Ursula von der Leyen's speech. She also said, though, the countries should implement essentially a reduction in terms of their electricity use, and she wants this to be a mandatory target to reduce electricity consumption by at least 5% each month. So let's see how that will be indeed implemented. But the other proposal that caught my attention was that she said that they will amend state aid rules starting in October. And this is important because it will essentially help all governments in the EU to support companies that are struggling to keep their doors open. One of them, for instance, is of course Uniper, which is just asked for more money from the German government. But von der Leyen, in her speech, she also explained that all of these proposals are temporary and emergency measures. Let's take a look at what she has to say.
These are all emergency and temporary measures we are working on, including our discussion on gas price caps. We need to keep working on lower gas prices. So on one hand, we have to ensure the security of supply. On the other hand, we have to ensure global competitiveness. The security of supply, because the gas still has to come to the European Union, the energy of all. On the other hand, if it's too expensive, it's damaging our global competitiveness. So we will develop with the member states a set of measures to take into account the specific nature of our relationship with suppliers, ranging from unreliable suppliers such as Russia to reliable friends such as our Norwegian friends, for example.
The caveat here is that these are proposals from the European Commission. Now, they will be discussed by the ministers for energy at the end of this month, and it will be really up to them to decide which one of these measures they actually want to agree with, which ones they want to implement. Ultimately, these are just ideas, and we have to see how far the member states will go in terms of implementation.
Sylvia, thanks a lot for bringing us all of the latest on this energy crisis in Europe. Of course, it's top of mind as far as UK goes right now and the entire European Union, and we will keep bringing you updates on that front. But with that, let's move on to some important national updates as well. Prime Minister Narendra Modi is due to begin his visit to Uzbekistan for the Shanghai Cooperation Summit later today. He's likely to meet Russian President Vladimir Putin as well as the Chinese President Xi Jinping on the sidelines. So Parikshit is here to bring us up to speed with everything that could be on the agenda. Parikshit?
Well, indeed, a very important regional meeting that is taking place, and SCO is the world's largest regional bloc comprising of India, China, Russia, Kyrgyzstan, Tajikistan, Kazakhstan, Pakistan and Uzbekistan. 30% of global GDP and 40% of global population. This is what this bloc really comprises of. Yes, the Prime Minister has bilateral meetings with presidents of Russia, Iran, Uzbekistan on the sidelines of this meeting. The meeting with President Putin tomorrow will be crucial. They will be discussing the energy partnership, the defense partnership going forward, and there will be also discussions on the war in Ukraine. Prime Minister would like to brief the Russian president on the situation at the India-China border and other regional developments from an India point of view as well. It is still unclear whether there would be a meeting between Prime Minister Modi and President Xi. A lot has been talked about that. Sources have been telling us that, that this is a strong possibility that the meeting may take place. Just a few days back, we had seen some sort of breakthrough as far as de-escalation at the border goes. But let's see if the two sides feel comfortable enough for a conversation on the sidelines of the summit. When asked about the possibility of a meeting with President Xi or Prime Minister Shehbaz Sharif of Pakistan, the Foreign Secretary said that the agenda is still being worked out. The agenda for bilateral meetings is still being worked out. So unclear whether those meetings will finally take place or not.
All right, important points there, Parikshit, when it comes to India's political diplomacy in the global arena. With that, we've come to the end of this edition of Business Lunch, but don't go anywhere. Midcap Radar comes up right next.